Let's get over to Leslie Picker with a special guest on that. Hey, Leslie.
Hey, Carl. Thank you so much. I'm joined now by Gil Simon of SoMA Equity. Thank you so much for being here, Gil, fresh off of your SoMA presentation in San Francisco, which I want to get to in just a moment. But maybe if we could kick things off kind of where they left it in that last conversation with Mike Santoli about the broader market. And as a tech-focused investor, I'm sure you have seen some volatility over the past few years or so. The NASDAQ, of course, rebounding a bit today, sliding yesterday. Investors still grappling with this idea of higher for longer, what that means for tech valuations. How are you screening for stocks in the current environment? Is it profitability? Is it growth? Are there other factors that you're looking for? And how is your portfolio positioned in terms of hedging and cash on the sidelines just to account for all of this uncertainty out there?
Yeah, hi, Leslie. Thanks for having me back on. It's nice to be back. So yeah, this year, as you guys have spoken about quite a bit, has been led by the biggest companies. There's been a flight to safety, a flight to a lot of the mega caps, as you guys talk about, the Magnificent Seven, who've been cost cutting, who have scale. People just want predictability in this market. The factor that we're actually looking for, that we've been optimizing for, is duration. So where the market has lost a lot of duration with rates going up the last couple years, there's been quite a lot of opportunity in companies that maybe are earlier in their life cycles, maybe that aren't currently profitable, or just have some more complexity to kind of their story and profitability. So a couple of names that we're going to talk about fit that bill, and there's definitely a lot of opportunity right now in the market as we see it.
Yeah, I want to hear an example of that. Obviously, your pick last night from SoMA was Roblox. How does that fit into the duration thesis as you outlined? This stock hit an IPO peak, a post-IPO peak, nearly 2 years ago. It's been essentially range-bound at about 1/5 that high for the last 18 months. So what catalyzes this stock to the upside in the current environment?
Yeah, range-bound would be a generous way to put it. The stock is down probably 60% or 70% since they IPO'd a couple years ago. This was a really darling stock when it came public. It direct listed. It was a play on this idea of the metaverse, which everyone was excited about a couple of years ago. But we think there are a couple of aspects that people don't really appreciate about this company or don't fully understand. One is the scale that they've built to. So it's now a 17-year-old company. It has 300 million monthly unique users, almost 70 million daily unique users, and that's almost, actually more than tripled since before the pandemic. And those users are engaged as high, at higher levels even than on TikTok or YouTube, at an average of over 2 hours a day. So the scale and engagement of this platform are really unique. The other thing that we think people don't fully understand is that it's actually a great business model. They don't create games themselves. What they do is attract developers to develop games and publish them on the platform. What Roblox gives those developers are the infrastructure, the developer tools, and then of course they share in the revenue to attract those developers. But there's now a huge built-in audience already on the platform, and all of that should lend to really high ultimate profitability. The problem is, in the short run, the company has been investing significantly to catch up with some of the big growth that they've seen in users since the pandemic, but also several meaningful initiatives, including layering in advertising onto the network for the first time, including layering in AI to help developers make games, as well as trying to age up the users of the platform, which are around 13 years old today. So a lot of initiatives, a lot of investment spending. We think that they're at the peak of their investment spending now, and the company continues to grow really nicely into this big kind of social media platform, not just, I think, what a lot of investors view as a gaming company.